Whoa. There we go. Greetings, greetings, greetings. Late night edition here. Have some things to cover. I want to go back through a little bit on the race for the next Fed chair because it's going to have massive impact on what's going to happen with markets and the outlook for 2026, frankly. I'm also going to talk about Fidelity potentially talking about a super cycle. So that is crazy. The last super cycle they called out was about a 10-year run. So definitely a pretty positive outlook from them on crypto, potentially. The other thing I want to talk about is some DePIN stuff. We've got a lot of updates today. Man, there's new stuff happening every single day in the DePIN space. Everything is just, the fundamentals are shining, man. It's pretty exciting. But I do want to talk about this right here. The Fed chair race is underway. It is heating up. And as you see, we now have Kevin Warsh in the lead. Unbelievable, man. Kevin Hassett was the strong favorite at over 85% just not even 2 weeks ago. And we have this big shift taking place. I want to give you my thoughts on this. I'm going to break down. I've talked a little bit about it over the weekend, but I want to give you my thesis on who's going to come out the winner here and what it could mean for our bags. This is something that is going to have a huge impact on what happens, at least in the short term for sure, and really throughout 2026 when it comes to crypto in particular. So Kevin Warsh and Kevin Hassett, call them good Kevin and bad Kevin. I want to talk a little bit about Kevin Warsh here. Okay, so there's this article that came out. This article came out back in October for Kevin Warsh, talking about his viewpoints. And I have covered this a little bit, but I want to hit the highlights here and really what Trump's looking for. Again, this guy just took over the lead for Jerome Powell's replacement, which of course is going to take place in May. So looking at his viewpoints, did I lose my highlights? Man, let me reload this and see. That would be really annoying. Well, I know what I had highlighted anyway. Bear with me, guys. All right. That's really frustrating. So here's the deal. Warsh wants lower interest rates, but his whole thing is it's not going to be accomplished by the Fed lowering rates. His whole deal is that he wants to, that's right. We'll do it live. Fuck it. We'll do it live. To lead us out. What does he mean to lead us out? That's great, man. So, okay, here's the deal. Warsh does want to lower rates, but he is under the belief that the Fed lowering rates is not going to actually impact the longer term rates. And he's actually probably right about this, to be honest, because we saw Jerome Powell lower rates at the end of last year, really through Q4 of last year. They went a full point down, and we saw the 10 and the 30-year actually go up. Okay, and that's not normal. So I think he is correct here in that, we need to restore confidence in the US dollar. So he says that here, and he has been critical of Powell as well. So his whole belief here is that the next Fed chair can reset the institution's credibility by overhauling the way the Fed thinks about its relationship with markets and the economy and the rest of the government. But this is key right here. And I think this is something that Trump would see favorable, is that he doesn't believe that inflation is caused by things such as supply chain and tariffs. And this is something that Powell has really been calling out is, hey, I think that the tariffs are going to cause inflation. So I think this is something that Trump will like. But the other part of this is that he thinks that he believes that inflation is driven by government spending and the money supply. Okay, and this is key right here. Then basically it says here that, this makes questions about whether Warsh will drop rates or not a moot point. His whole thing again is, hey, we're going to cut government spending. We're not going to have the printing press on. We're not going to have QE. We're going to restore confidence in the dollar. People will be interested in buying our treasuries, and that will push yields down. Now, I believe that could happen and likely would happen, but it's going to take time. Okay. And that's the main thing here. That's not going to happen overnight. And I think there's going to be short-term pain associated with that if we go that route. I don't think that's good for our bags in the short term either. Okay. I think it is good for the overall health of the US dollar and the economy in the longer term. But is that what Trump wants? That's the big question. And it says that down here. If I can find where I had this highlighted. Oh, I do have some of my highlights. How about that? At least one of them. So he says the models that the Fed uses to interpret economic data are wrong in Warsh's view. But I don't have the rest of my freaking highlights. Well, that's just ridiculous. So here's the deal. This is the main thing with Warsh. Warsh wants not just to reduce the size of the balance sheet. Of course, this again would mean quantitative easing is off the table. Okay. Increasing the balance sheet of the Fed means that they're buying up treasuries. That means that they're printing money and pushing liquidity into the markets. So that's not what he wants. He said with due notice, he'll do it to avoid disruption. He also plans, and I think this part is kind of interesting. He also plans to give Treasury Secretary Scott Bessent a large share of responsibility for how and when it happens. Okay, so that could be quantitative tightening. Also could just mean that they're letting them run off the balance sheet and not replacing them potentially. Okay, or maybe keeping it at neutral and not increasing, but keeping a neutral balance sheet. Says the Treasury Secretary would need to find the proposed change in Fed holdings acceptable, given that it is partially fiscal policy in disguise. Okay, so of course, you have the Treasury who oversees fiscal policy. You have the Fed that oversees monetary policy. But Warsh would turn off that part of what he refers to as monetary printing press. So all the things we've been excited about, like, hey, I think they're going to put a Fed chair in there that's going to cut rates, right? That's going to be turning on QE and turning on that printing press. I don't think that we're going to find that with Warsh, guys. And he is very much keeping inflation in mind, right? So that's the big thing. Actually, I've been reading this book. I highly encourage people to read this. It's a super easy read, Lords of Easy Money. And it talks about what we saw back with Helicopter Ben Bernanke and how he started QE and printing money. And then you had Thomas Honig on the other side that was the one dissenting member. And, I think Warsh aligns with Honig, right? Where he's not wanting to print money. He's wanting to cut government spending. And I think a longer term that could work, right? Hassett on the other side of things, I think that he is going to be quite different if he gets selected. And I'll get more into that in a second. But here are some comments that Trump made just recently, just the other day.
Market should go up, and we should keep driving it up and have it keep going up and let it be much, much bigger, much, much better. And, growth doesn't mean inflation. They're always afraid that, and if there is inflation, that's okay, then we can slow it down.
And that part is key. That makes it very clear. Trump wants rates cut. He even mentioned as much as, as low as 1% recently. And right there, he says, if we do have inflation, then we can fight inflation at that point. In other words, he wants growth. He wants to stimulate the job market. And if that means inflation comes back, so be it. We can raise rates. We can fight inflation if we have to. That's very different than Warsh's stance. Okay. Warsh is inflation minded first. Okay. Growth secondary. And he's willing to take some pain based on his monetary stance on things for the long-term good. Okay. I don't think that's what Trump wants. The other thing I'll mention here is that he's in favor of CBDCs. He's been very outward about this. He wrote an op-ed for the Wall Street Journal where he said the U.S. should develop a central bank digital currency. Well, we know what Trump's stance is on that.
For it is very important, actually. I will never allow the creation of a central bank digital currency.
So just another way that they are not aligned. Okay, so I have to think Hassett is the front runner here when you look at the monetary policy. Let's hope that this kept my highlights. I don't know what's going on here. I don't think it did. So on the other end of things, I'm really not happy with my computer right now. I think this is where it talks about man. So Hassett is Hassett is in favor of cutting rates. Okay, he also is a crypto bull, and he has crypto assets. So he disclosed that he has at least $1 million of Coinbase stock. It's estimated that he has as much as $5 million in Coinbase stock, and in total crypto holdings as much as $7 million. So very different. Okay, very pro crypto on Hassett, very CBDC on Warsh. You also have Hassett that all of my highlights are gone. You also have Hassett that said, we are way behind on cutting interest rates. Okay. He actually worked. There we go. There we go. He also worked back in the 90s with Alan Greenspan, okay, during the computer revolution, as he calls it. He went on to say that he actually likened that computer revolution to what we're seeing with the AI revolution right now. He said that we should expect from AI, and we should expect from AI a boom right now. And I think the Fed is right to cut rates right now, and I think there's a lot more room for them to do so. Okay, so Hassett's all about cutting rates now, being aggressive in cutting rates. He thinks he can do so without causing inflation, right? He's a crypto bull. On the other end of the side, on the other side of things, you have Kevin Warsh, who is not going to be as aggressive about cutting rates, right? He doesn't want to use QE. I think he's willing to take the short-term pain for the longer-term gain. And he's in favor of CBDCs. Trump is very against that. Okay. So all that considered, I think the biggest factor in all of this, though, in my opinion, is that we have the midterms coming up, guys. There is so much at stake right now for the Republicans. I don't think Trump can afford to take short-term pain with the midterms coming up. So in my opinion, I just think it's clear that the decision has to be Hassett here. I would be shocked if it ends up being Warsh. And you never know. Maybe somebody else comes into the fold last minute. That wouldn't be crazy. Trump likes to throw a wrench in things at the last minute. Now, there is something here that I thought was interesting. This report actually said that Trump is expected to select a candidate in the coming days, at least by Christmas holiday. And I looked further into this. And says that as of December 15th, Trump has stated that he expects to announce his nominee to replace Powell early in 2026. Says earlier reports from November and early December suggested a possible announcement before Christmas. This is based on comments from Scott Bessent. However, more recently on December 2nd, Trump clarified during a cabinet meeting and in statements to reporters that the announcement would come early next year. So in early 2026. So this is going to come down the pipe soon. We're gonna know probably in January or February who the next Fed chair is. And I believe the market's going to react very differently depending on who he chooses here, based on everything we just covered. And I think this is wild to me that we have now Kevin Warsh sitting at 49% on Polymarket. When you look at Kalshi, it's even a bigger difference, 49 to 39% here, a 10-point spread on these guys. I don't know, man. I have to think, based on the research that I've done, that Hassett has to be the guy. We'll see, and we'll know soon. But I pray for our bags if it's Warsh. I'll say that much. All that said, though, the printing is on. The overnight repo markets, this is for our banks to draw on liquidity. Well, back at it again, $5.2 billion drawn on. That's as of today. That's just today, $5.2 billion. That was a big reason why they said they were going to be, purchasing T-bills again, which that's underway as well. We started that on the 12th, $8.16 billion. Again today, $6.8 billion. So the government is purchasing T-bills right now, pushing liquidity into markets. What's crazy, though, and what's wild to me is that the reason they introduced this plan was to avoid a repo market catastrophe, but we're still seeing our banks draw on the repo markets. And there's another lever they're pushing liquidity into markets from, and that, of course, is the Treasury General Account. You can look at this as like the Treasury checking account. It had built up during the government shutdown up to right around $957 billion. Guys, in the last couple of weeks, this thing is down to $858 billion. So almost $100 billion has been pushed in liquidity from this general account as well into the markets. Or into the economy. So like the liquidity is being restored. I still think from the crypto perspective, we're still feeling the pain from 1010. That Binance situation did a number on things where there's rumors going around that Wintermute was pretty much destroyed. They're one of the largest market makers out there. I imagine there are some other big accounts that got blown up. And I believe over 1 million individual accounts got liquidated on 1010. So we're going to feel the effects from that for some time, I still think. I don't think we're out of the woods. But I do believe, based on some of the things I'm going to cover here, we could be getting close to a bottom. We'll see. We'll see. Fidelity, and this is from Bitcoin Magazine, but Fidelity reports that Bitcoin's 4-year cycle may be over. Apparently, we believe we could be entering a super cycle, according to Fidelity, at least according to Bitcoin Magazine. But for reference, a super cycle in commodities in the 2000s spanned a decade. Now it says source, Fidelity Investments. I have to say, I tried to verify this and looked for any official word from Fidelity on this. I couldn't find it. So maybe that report is coming tomorrow. This was just posted today, so potentially. But there are a couple things I want to share here. This guy's talking about how this, for the 4th time in history, the RSI against gold is hitting under 30. This happened 3 other times. The bottom of the 2015 bear market, the bottom of the 2018 bear market, the bottom of the 2022 bear market. So it's not a guarantee, but it can clearly say that one of the two is overvalued to the other. In this case, gold is likely overvalued. It's been pumping like crazy. But we do tend to see, after gold pumps, a rotation to Bitcoin. So we'll see if this repeats. Certainly hope so. We also have some other metrics. The last time Bitcoin was this oversold was at the exact bottom of the 2019 bear market. And of course, this is all while we're sitting here in the extreme fear range. We've been here for an extended period of time. I mean, we're coming up on the longest run of extreme fear we've ever seen in Bitcoin's existence. Historically, this has been a good time to DCA. I personally am not interested at all in any leverage. With the way we're seeing these positions flushed out, I think there is manipulation taking place. I think you have the likes of Binance and Wintermute. I think they're trying to make Wintermute whole on some of those losses. That was Binance's fault. I have a video on that you should check out if you haven't watched it. So I think they're still trying to make Wintermute whole here. That's why they're flushing leverage up and down. Hopefully, the clarity bill will put a stop to that. We'll see. The other thing, and I think this is a really important factor, supply shock is mathematically inevitable. So I ran the numbers on who actually controls the Bitcoin supply. The free float is disappearing faster than you think. Right now, exchanges are holding 2.94 million Bitcoin. So this is where the liquidity exists. US ETFs are vacuuming up the Bitcoin. They're holding 1.31 million Bitcoin. Public companies and their treasuries are holding 1.07 million. Governments are holding 0.62 million through seizures and reserves. So total 5.94 million Bitcoin, around 30% of the circulating supply. It says almost 30% of all Bitcoin is sitting in the hands of giants. Isn't that crazy? And I think some of the manipulation, by the way, is to get people to paper hand so that they can accumulate. But think about this. Giants are holding 30% of all Bitcoin. But here's the real story. ETFs are cannibalizing the exchanges. Every day, coins move from the exchange bucket, again, the liquid bucket, to the ETF company bucket. There are only 2.94 million Bitcoin left on exchanges. Once that drains, there's no price ceiling. I do believe the supply shock is coming. And you have to also think, a lot of these ETFs have been buying OTC from Bitcoin whales. That's why we haven't seen, with all that buying, we haven't seen the crazy price appreciation. That can only last so long. We've seen a huge percentage of the supply change hands throughout this year. I always come back to this, the silent IPO theory from Jordy Visser. He talks about that. I think this consolidation period, this changing of hands period, once that's up, I think we're going to see a parabolic move upward. I really do. Winter mute sucks. Yes, they do. Thoughts on short-term cap loss harvesting? I mean, I think that loophole is going to be closed next year. So if you're going to do it, you might as well do it this year. I was talking to Tyler about this. Essentially, when you have stock, if you sell it for a loss, you can't rebuy for a month. That doesn't exist for crypto right now. So you could, if you're underwater on any assets, you effectively, this is not advice. You need to talk to your accountant about this, but it is a loophole. It's what do they call it? The short-term loss harvesting, but I think it's wash sale. I forget what the official terminology is, but you can effectively sell your crypto assets, right, and get that loss. You can rebuy it immediately. You don't have the 30-day wait period. So that is something, though, I think in the Clarity Act, they're going to close that loophole. So this would probably be the last year you can do it. Now, I was talking to Tyler about this, depends on how big your position is. How much are you able to make? How much can you save in taxes by having that loss? And what are the fees to doing so? How much liquidity is there, depending on what tokens you're holding. If you're selling a large amount, you could move the price, by selling and rebuying. So there's a lot of things to consider there. So even a box in the 1099. Yeah, the wash sale. Yeah, so it is. The other thing I saw is apparently on the new forms, there's a place where they want you to disclose all of your wallets and holdings and stuff. I feel about that. Now, I would say, though, I would not recommend trying to skirt taxes, man, in crypto, because everything's on the blockchain. It's there forever. And with the AI tools they're going to be building out, I imagine they're going to be going after people looking backward if you're trying to avoid taxes. So I would not recommend trying to skirt taxes. Well, there you go. How about that? You said you don't know about that. I would imagine they will, but maybe not. If not in the next 2.5 years, I bet after that they will, depending on who's elected. All right. All that said, guys, we are sitting in extreme fear. We're looking oversold. All this, right? We're still sitting at just under $86,000. For me, I'm not expecting any major relief until we hit back above the 94,000 threshold close around 94,000. That was when we broke out of the last downtrend. We've made some higher highs, some higher lows, but until we break that, I'm not expecting any type of like really positive price action. So in the meantime, it's chopping. I'm DCAing spot positions on my conviction plays, especially in DePIN. I think these times don't come around that often, guys, where we're in this much extreme fear. These are bear market prices. I know it's painful, but when no one thinks the market can turn around, everyone thinks it's dead. Those are the opportunities that are the best to DCA historically. If you were buying in 2022, 2023, you pretty much couldn't have lost money. Like seriously. If you bought projects back then in DePIN, pretty much all of them would have been up by 2024. So to me, the conviction plays, obviously robotics, compute, data collection for AI training. I mean, those to me are the clear winners. Solana news coming out today. Ondo partnered with them. Says largest platform for tokenized stocks and ETFs is coming to Solana in early 2026. Wall Street liquidity meets internet capital markets. Guys, this is huge. So I just don't understand how everyone can look at all the things that are happening. Our banks are about to let you start taking out loans against your crypto assets. You're about to be able to custody straight in your bank account. They're about to be able to essentially be a broker for crypto assets for you. I covered over the weekend, the IRS is putting out guidance on how to self-custody your crypto assets safely. Like, this type of news, back in the last market cycle, Tesla announced they held Bitcoin and like freaking went to the moon. This is like unthinkable. The stuff we're seeing every single day, yet they're holding the price down. And I think it is manipulation. I think they're trying to wash people out. If we get Hassett in there, all bets are off, guys. Seriously. I believe you're right. I do believe you're right. There's more likely than not near bottom. Yep, I agree. Long, good Kevin. Kevin Hassett. In Kevin Hassett, we trust. And Kevin Warsh, we do not. I know it's a little bit greedy, because here's the deal. I think Kevin Warsh is probably better. His monetary policy is probably better for the long-term viability. But shit, man, I'm trying to pump my bags. All right? Like Hassett, get in there, buddy. I don't care what you have to do. Go, tell Trump how amazing he is. So he loves that. All right. We're going to reshare this because we got to get the audio on there. Let's get into the DePIN stuff. Boop, boop. Here we go. Check out this video, guys. Check it out.
They need training data too. And it turns out that decentralized physical infrastructure networks like Helium and HiveMapper have already proven the model of bootstrapping a data network by incentivizing a bunch of people to deploy hardware. These DePIN networks, I don't think people even know this exists, but networks are like on Solana. Wow. Builders there are not distracted by noise. Right. They're building because somebody needs their product and they're not getting even stage time over it.
Are you going to have a humanoid robot in your home?
As soon as pre-orders open for any humanoid robots, I order multiple.
Boom. All right. Well, that is Raj with Solana, 350,000 followers. He's correct. Like, I don't think a lot of people know that DePIN exists, and that they're building. They're drowning out the noise and they're building. That's what we've been doing all year long. As frustrating as it's been with the prices, if you weren't paying attention to the charts and just looking at the fundamentals and the building that's taking place, it's insane. The revenue coming in. Whew. Yes, unleash DePIN. I agree. All right, I want to talk about Rover and their staking program. So they've done something a little bit differently than what HiveMapper did. HiveMapper has their monthly payment plan. Rover has a staking program that if you stake Rover tokens, you can get their hardware and map with it. And then when you return that hardware, you get your stake back. When you return the hardware, you get your staked tokens back. It's So I want to run you through the details of their staking program. So this is updated. I think they just put this up today, I believe. So in this overview, this guide is intended for users staking tokens to receive Rover devices. Requirements: a compatible wallet, so Phantom or other Solana wallets, and sufficient Rover token balance. The staking requirement depends on the hardware you're looking to acquire. Obviously, the TX is going to be a lot less than the Litecoin. So 300,000 Rover tokens, if we look at current prices, freaking nuts, 0.0085 under $2 million market cap. No fucking way. I did the math on this, and I believe it's about $2,500 for the Litecoin right now in staked Rover tokens. So they have a really good guide here. Basically, you have to open the official Rover staking redeem page, which they have linked here. Log in using your Rover account or scan the QR code. It says click connect wallet, select your wallet, and approve the connection. Select the device you want to redeem. It'll tell you if you have a sufficient balance. You would click on stake Rover, wait for the blockchain confirmation. It does give you some troubleshooting here in case you have some issues. And once the staking is successful, you will receive a discount code. So essentially, you go into their shop, you can use that discount code, you enter your shipping address, and submit your order. So it's pretty easy. It says the first batch of staking devices will be shipped January 15th. Devices are shipped within 3 to 7 business days. You'll receive your shipping confirmation and tracking number via email. Shipping costs are covered by Rover, but if you have import duties, VAT, any other local taxes, you are responsible for those costs. Okay, so good to know there. The staking period is 1 year. So if your tokens are staked for a full year, you're out mapping. When you return that hardware, you can get your full stake back. Now, if you don't keep it for an entire year, there is a deduction on your stake. For every month early, it is 1/12 of your stake. Okay, so in other words, if you only kept it for 6 months, then you would only get half of your stake back. All right. The other thing is they want you out there mapping with it. Okay, so you have to be active. If the device is inactive for a full month, then 1/12 of your stake tokens will be deducted. It says inactivity means no data uploaded during a 1-month rolling period from the previous upload. Okay, so makes sense. You know, if you are looking to stake your tokens for a full year, you're mapping actively with it. Then after a year, you can return and get your stake back. So some FAQs in here. I'll cover a few of them. Do stake tokens generate yield or rewards? No. Okay, your stake tokens do not provide additional yield. The rewards generated have no lockup period, though. And the staker can keep 100% of their mapping rewards. Can I stake for multiple devices? Yes. But the staking action applies to only 1 unit. So you'd have to stake for each incremental unit. You may perform multiple staking operations for additional devices. Can you change the wallet after staking? No. Once staking is completed, the wallet address is permanently bound to the device. So for fleet users, the fleet owner staking wallet must remain the same. Rewards can then be distributed to drivers. And this last one here, can I change the wallet connected to my Rover app after I receive the device? No, the Rover app wallet must match the wallet used for staking. If the wallet is changed, the device cannot generate rewards or receive mined tokens. So there you go. That is the breakdown of the Rover staking program. I think it's a cool idea. One thing they didn't cover, which I would have some questions about, is what if there's damage or theft? I would imagine you lose your stake because it does say you have to return the unit to get your stake back. I'm sure if it's just like a normal warranty claim, they'd replace it. But it doesn't really specify in there from what I could tell. All right. Let's talk about Ex Machina. They have a new company on their radar that they are looking to potentially put up for a vote for investment. So it says this Sunny Day Robotics humanoid memo, that's the name of the robot, learns from how you actually live. No VR puppeteering. We've seen some robotics companies that They want to have access to the camera and the robot in your home to see everything you're doing in your house. Like, no way. It says no lab only demos, just real household data captured at scale. So I actually went in to look at this. You have, by the way, you have Mauricio, that is their CEO. Mauricio, their CEO. He's talking about the same thing. Sunday robotics. It's a no-brainer. So I looked into them. Here is, what do I have two? You know what? We're gonna come back here. I'm gonna reshare. I've got like 2 tabs saying share. I don't know which one is the right one. So we're gonna go back here and reshare. So this Sunday robotics says leave it to Sunday. 14,000 followers. I would give them a follow. Pretty cool stuff what they're doing. So this is Memo. Memo works in the kitchen. Check this out. Memo doing dishes. Look at that guy. Just cleaning up, setting the table. Even does like your laundry. Look, he's making coffee for you. Give me a break. Folding socks. It's so crazy. Like this stuff is actually happening. Look at him making espresso. The big question I have though is, can you do an Americano? Okay, or a latte? You better be able to steam milk, bro. Okay, seriously. So this is how they do it. They have this hardware people wear on their hands, and they're able to train. A little video here, I thought. They're able to use this hardware and be able to train actually the different movements. So as opposed to them having to have access into a camera into your house, this is how it's done. So it's pretty cool. The Capture Glove enables Memo to distill millions of human movements into its onboard AI, unlocking helpful home skills. What the glove does, Memo learns. There you go. So there you are, picking things up, teaching your robot how to handle the task that you want it to do. So that's pretty cool. So this is going to be up for a vote in the DAO for Ex Machina. A live look at their current allocations. They have stake in 1X, Aptronic, Figure, Agility. So they're going to continue adding really cool projects. I'm going to be getting their CEO on for an interview here shortly, so that'll be very exciting. How about this update for Aukey? They have partnered with NewNet. So when we began our collaboration with Aukey, the goal is simple but important. Make it dramatically easier for anyone, even non-technical users, to deploy and run Aukey nodes. Guys, I can't tell you how important this is. I think a lot of projects really miss the mark here. They make it super difficult to participate in the networks, super difficult to set up nodes. And I think there's a lot of smart people in this space, but they tend to forget that not everyone is as technical as them. It's kind of that engineering mindset. So I think this is really important. Today, we're proud to confirm that the NewNet and Aukey proof of concept has been successfully completed. It validates a seamless onboarding journey, consistent deployment environment, and NewNet's ability to orchestrate Aukey spatial workloads, including their latest reconstruction servers across a global community-powered compute network. So Aukey had challenged NewNet to reduce the friction required for community members to run Aukey nodes. Ideally, the experience would approach a one-click deployment. So that's essentially what they've done here. They have a lot of notes on what they did to streamline the process, but they made the onboarding process a lot easier. The thing I want to focus on here, though, is their future roadmap. So it says here, they will now expand into GPU-accelerated spatial workloads, combining reconstruction with AI inference. Also talks about building interoperability frameworks for multi-DePIN collaboration and cross-ecosystem GPU sharing for XR, robotics, geospatial, and more. The long-term vision here, a decentralized infrastructure layer where compute is elastic, shared, and powered by the community. So big update there. I don't know why that video is there. I don't like that. But huge, Huge stuff from Aoki. They continue to execute, man. They've got the customer announcements left and right. Covered it just the other day. They had a customer that wants to add 50 locations per day. And now they're making it easier to participate on the DePIN side of things to set up the nodes. So kudos to the team. Congratulations to Aoki. You guys continue to impress. Speaking of seamless onboarding, Havelo is another project that's been doing these things as well. If you go to their website, super easy. If you have a computer, sign up and install their software, connect your device, and grow your earnings. So they've already partnered with a number of different projects here. One they haven't listed yet, I assume they will have to add to their website soon, is that they partnered with Flux. So you can now get access to Flux and participate in that ecosystem. But essentially, it partners you up with your compute power based on what type of compute you have. It'll set you up with any of these projects listed here, including Flux, and you'll earn tokens for renting out your compute capacity. They make it super easy. Speaking of Havelo, this is kind of an offshoot of Havelo, is their DePIN coffee hour they've been running for a while. I'm going to be on there tomorrow morning, guys. We're going to be talking about the GPU gold mine. So we're going to be making a case for why a lot of the decentralized GPU projects are very promising. And I think there's going to be a really big need with what we're seeing with compute resources basically being hoarded by the large entities. They've got the full access to the high-end NVIDIA GPUs. They're building out all these AI data centers. We've got a huge power issue, though, with our power grid. I believe these decentralized compute projects, especially as we see more of the workloads go to inference, they're going to do very well. So we're going to be covering a lot of those projects tomorrow. The revenue metrics and their prices, which most are sitting near bear market lows, some below their bear market lows. Guys, this is the time to be dialing in. I want to talk about Silencio a little bit. This is from Theo. So, you have Theo and Thomas, two brothers that started Silencio. He talks about what's been working for them. So voice AI data collection is at an all-time high. They currently are collecting 400 to 500 hours of voice data per day. It says that this is 15 to 22,000 per day in potential revenue. So we're gonna talk to them tomorrow. Actually, I'll talk about that in a minute. But $15,000 to $22,000 per day in potential revenue. Currently, demand exceeds supply by 100x. The biggest AI companies are all requesting data. The clients want to buy as much data as we can deliver. That's a good place to be. That's a good problem to have, right? Like when you have so much demand, you can't have enough supply. It's better than the other way around. I'll say that much. So here's what they're focused on: closing the supply-demand gap, deliver a fantastic user experience, including faster payouts. Apparently, that's one of the complaints they've been getting, is that the payouts haven't been fast enough. They have leaderboards for creators and referrals, higher stablecoin earnings for SLC holders. So more of that coming soon. So I imagine if you are an SLC holder and you're staking your SLC tokens, you can earn more. It says launching new distribution channels to reduce friction on participation. A base mini app, WorldCoin app, WhatsApp, and Telegram bots. Launch more voice AI campaigns. It says some of our early goals for early 2026 include scaling to 100,000 users, collecting 100,000 hours of commercial voice data by Q1 2026. That's soon. And begin strong buyback programs of SLC with voice AI data sales. Let's go. That's huge. So driving utility to the token. I think that's some big goals there. But I'll tell you what, guys, it's pretty easy. You go to the link that they have there. And this is an example. I signed up. It tells you based on, when you sign up, you put in what languages you speak, what area of the country you're from. So it knows like what kind of, I guess if you have an accent, I don't know what kind of dialect you would utilize, but it tells you what you qualify for. So they're launching new campaigns all the time. So right now I have very little ability of speaking Spanish. I took Spanish for like 5 years. I should be able to speak Spanish way better than I can. I'd say my Spanish is very limited. So I can only really participate in English campaigns. But in this case, I have a couple right now that I qualify for. So it continually tells you based on what languages you speak, based on what you input when you sign up, what you qualify for. Here I have one I can qualify, I can participate in right now, earn up to $10 per hour in USDT for joining that campaign, which I intend to do so. We are bringing Silencio on tomorrow. So I'll be on the coffee hour bright and early. And then shortly thereafter, we will have the team from Silencio on. And we're going to be able to ask them all the questions, about their stablecoin payouts, who's buying the data, what's the demand look like, future milestones, roadmap, etc. Very exciting stuff. So if you haven't already, set the reminder for that, guys. Let's go. Tyler said, let's go. Let's go. I agree. All right. That's all I got for you tonight. I got to go prep for that coffee hour because that's super early. So I'm going to get all my notes together for that session. Highly encourage you all to check that out too. It'll be streamed from my X, my YouTube, from the coffee hour, X and YouTube. I think they even go to like on LinkedIn as well. So a lot of different avenues there. So very exciting stuff. For all y'all that joined tonight, appreciate each and every one of you guys. Have a fantastic evening, and I'll see y'all tomorrow morning. Peace.